if you look at the Federal Reserve's own balance sheet, I mean, they're in the red. They're operating at a loss now, and essentially we're seeing the slow motion version of that happen to the commercial banking sector. We're obviously seeing more and more regulatory hits against that space. Basically, is they define what is a security,
Mhm.
which assets are have violated security laws, which companies have violated security laws by selling those assets to the public.
The banking crisis continues, and cryptocurrencies seem to be benefiting any time there's a new bank struggling. Lyn Alden gives us some insight into what to expect from the banking sector, but also warns that altcoins may not be safe, as a lot of them could get wiped out when regulations are rolled out. If you're interested in cryptocurrencies, then you must listen to this. But remember to first subscribe to the channel before you proceed.
I separate kind of Bitcoin from the rest of the crypto space.
Yep.
I think the broad crypto space, I think the noise to signal ratio is unfortunately very high. I still think there's a lot of froth that has to bleed out. I think we're obviously seeing more and more regulatory hits against that space. Basically, they define what is a security,
Mhm.
which assets have violated security laws, which companies have violated security laws by selling those assets to the public. And so I think that whole space is kind of fraught with landmines going forward. I'd be very cautious around putting serious capital in that space. Bitcoin I put in a different category because it's not a security. It's recognized as a digital commodity because it doesn't pass the Howey test. I also think the fundamentals that the actual decentralization is more robust, and so I do think that a lot of the froth has already been worked out of the Bitcoin space. A lot of the tourists have gone during this whole kind of catastrophic bear market. There's a lot of interesting development that's happening, both in terms of you can get exposure with the underlying asset, but then also for accredited investors, there's actually interesting, say, VC opportunities out there that I think quite good. But once you go to the broader space, I still think there's a lot that's probably going to bleed out over time in terms of existing froth across the market.
The SEC applies the so-called Howey test to determine whether a crypto asset is a security or not. The Howey test asks 4 questions. Firstly, is there an investment of money? Secondly, is there a common enterprise? Thirdly, is there an expectation of profits? And finally, do the profits depend on the efforts of a promoter or third party? If the answer to all 4 questions is yes, then the crypto asset is likely a security and must comply with federal securities laws. This means that the issuer must register with the SEC or qualify for an exemption, and that the investors must have access to adequate information and disclosures about the asset. The SEC has already taken action against several altcoins that it deemed to be securities, such as Ripple, Telegram, and Kick. These cases have resulted in lawsuits, settlements, fines, and delisting from major exchanges. The SEC has also warned investors about the risks of investing in unregistered or fraudulent altcoins. The regulatory status of altcoins is not only uncertain in the US, but also in other countries. For example, in the UK, the Financial Conduct Authority, or FCA, has announced that it may begin to fully regulate crypto assets within 12 months. The FCA has already banned the sale of crypto derivatives to retail investors and warned about the high volatility and lack of consumer protection in the crypto market.
You define yourself as a Bitcoin trader, you want to focus heavily on things like liquidity. I've done a lot of work on trying to figure out what are the main factors that are the strongest correlation with Bitcoin price. So, historically, one of the ones is the halving, but that's actually not really good for a specific timing purpose. Generally, liquidity and economic indicators are better. So, if you put it simply, if you buy Bitcoin when the PMI is rising, you're going to have a better time than if you buy Bitcoin when the PMI is falling. And if you want to get more precise than that, if you look at various liquidity indicators, they generally front run PMI a little bit.
Yep.
And Bitcoin also tends to front run PMI a little bit. So actually the closest correlate that I've generally found for Bitcoin is various measures of liquidity, both domestic liquidity and then global liquidity, including, say, dollar-denominated global M2 in rate of change terms. Those are the types of things that correlate heavily with Bitcoin. And so in any sort of like near-term environment, if you're trying to judge what it's going to do in a multi-week or multi-month period, you have to generally have a decent view on what liquidity is going to do. Whereas long-term, You can look at things like, what percentage of the supply is liquid versus like tightly held. What are the developments happening on that whole ecosystem? So what is making Bitcoin better to use, better to interact with? What are the other technologies kind of building on that whole stack? And so the way that I view Bitcoin is I have this kind of long-term holding, this very long-term structural view that I occasionally check to make sure that thesis is still in place. But then I use the shorter term stuff, the cyclical stuff, to one, manage position sizes, and then two, set expectations in a near term. And so, for example, I would use during this past cycle, I would use GBTC as a way to, get in or get out, kind of change my position in that sense. Whereas, like, say, cold storage Bitcoin, I treat more like physical gold, where it's something that you have a structural view on that you almost hold as a separate, like a separate category.
Bitcoin has been on a tear in the first quarter of 2023, leaving behind the top 5 global stock indexes by a wide margin. The leading cryptocurrency posted a whopping 69.4% ROI, while the average returns for the indexes were a meager 5.5%. Bitcoin's impressive rally was fueled by its recovery from the brutal crypto winter of 2022 and its appeal as an alternative to the troubled banking sector. Bitcoin's relationship with gold has also been strengthening, signaling that investors regard Bitcoin as a safe haven and a hedge against inflation. The correlation between the two assets soared to 57% in early October of 2022, the highest level since late 2020. Bitcoin witnessed massive outflows from exchanges to personal wallets, indicating that investors were confident in holding their coins rather than cashing out. The same theme of Bitcoin's correlation with gold is echoed by a report from Bank of America strategists. The report also observes that Bitcoin's correlation with major stocks like the S&P 500 and Nasdaq 100 has been slowing down, suggesting that investors see Bitcoin as a relatively safe haven amid macro uncertainty.
Back in 2008, going into that event, you had basically generationally low cash and safe assets on bank balance sheets relative to their riskier things like loans, things that can actually default. And obviously they did run into a default event, so they risked their whole bank capital getting wiped out by these series of defaults. And it looked in many ways very similar to the 1929 crisis in terms of, say, the how much bank loans were outstanding relative to the monetary base. These kind of like these big generational charts in the quantitative data. And so that whole the 2008 crisis and the 2010s aftermath are in many ways very similar to the 1929 crash and the whole 1930s aftermath, which is, going back to Neil Howe, that's, basically the fourth turning type of environment. This one's different in the sense that it's at least so far, there are certain pockets of credit risk, but the main thing hitting banks is that ironically they invested in very safe assets, but at wrong prices, and now they're facing their deposit rates going up, they're facing unrealized losses, and then they have a challenge where they can hold those assets to maturity, but the market doesn't always let them do that, especially if they have deposit runs and things like that. So earlier, last month there was a liquidity crisis. Now I think it's evolving more towards a profitability problem because, while the Fed and others have these facilities in to prevent ongoing liquidity, or at least reduce the severity of some of these ongoing liquidity problems, banks now face an issue where, they have some of these long duration assets that might be relatively safe, and many of them are, but then they have rising deposit costs overlaid on top of that. And if you look at the Federal Reserve's own balance sheet, I mean, they're in the red. They're operating at a loss now because their liability is adjusted upward very quickly. That's a policy they decided to do, and essentially we're seeing the slow motion version of that happen to the commercial banking sector.
Now, the banking crisis is different from the 2008 global financial crisis because it involves smaller and more specialized banks that were vulnerable to specific shocks, such as the volatility of cryptocurrency and the inversion of the yield curve. Mark Zandi, the chief economist at Moody's Analytics, says that the crisis isn't systemic and that regulators have learned from the previous crisis how to prevent a domino effect. However, he also warns that the situation is fluid and uncertain, and that some banks may need more capital or liquidity support. The banking crisis has hit regional banks hard, especially those that cater to niche markets or sectors. First Republic Bank, which was rescued by a consortium of larger banks after suffering a liquidity crunch, Signature Bank, which was shut down by regulators after losing most of its deposits due to its involvement in cryptocurrency, and Silicon Valley Bank, which collapsed after selling its treasury bond portfolio at a huge loss. Despite the recent boosts Bitcoin has enjoyed, it still struggles to cross the $30,000 mark. But what about you guys? What's your prediction for Bitcoin? Leave a comment below right after you hit that like button, and we'll see you in the next video.